Good evening, ladies and gentlemen. A very warm welcome to the earning calls of PC Jeweler for the Q4 FY18 as well as full fiscal 2017-18. Along with me on this call, I have my MD, Mr. Balram Garg. The results for the Q4 and the complete FY are already available with you. We have also put a management presentation on our website, which provides a detailed analysis of both our P&L as well as balance sheet figures. I will not go in details of the figures already available with you and leave that to Q&A. I'm sure that you have all gone through our presentation. We have tried to increase the disclosures and provide additional data points to our investors. However, we are very happy to report a Y-on-Y growth of almost 27% in our domestic sales and almost 32% growth in PAT. The company has improved its profitability in spite of doubling its ad spend during the year. At the same time, I would like to present the management clarifications on some of the issues raised in last 2 months. The first is gifting of shares by one of the promoters, Mr. Padamchand Gupta. PCJ is a first-generation business which has been set up by the combined effects of Mr. PC Gupta and his younger brother, Mr. Balram Garg. These two brothers have the full management control of the company, and any gifting by Mr. Gupta has not changed this position. This gifting has been made by Shri Gupta in his personal capacity and within his family itself. This is a personal decision which has not affected either the management control or the future growth prospects of the company, and the company is not affected or concerned by the end use of the gifted shares. The promoters have till date never sold or pledged or touched their shareholding in any way, and this gifting was the first ever transaction they have done with their shareholding. Thus, they did not have any anticipation of the market reaction to this step. They, however, conveyed their regret to the investors on this entire episode. The promoters' involvement in this business and the commitment to the same is also reflected in the fact of providing their personal guarantees and collateral to the bankers for the working capital loans given to the company. Second point, cash on the balance sheet. As disclosed in the financials, PCJ has almost rupees 1,500 crore of cash lying on its balance sheet. The company is using this cash on the balance sheet in the form of fixed deposits. The company is using this cash to support its working capital requirements and will also be drawing down the required amount of the buyback from the same. We also clarify that as the number of franchisee stores goes up, the requirement of internal working capital will continue to decline as the franchisee investments also come in. The company is also reducing its liabilities from banks from this cash. Number 3 is finance cost. The finance cost components include CC interest, MGL interest, as well as SBLC commission and bank charges. During the past 2 years, the company has paid coupon on the CCDs, and which is also included in this figure. The percentage of finance cost to the overall sales has reduced to 3.06% from 3.86% over the last 2 years. Going forward, this ratio is expected to decline further as the company is utilizing more and more of its cash for reducing its liabilities / debts from banks. Number 4, export business. There has not been any change in the company's export model since beginning. This business continues to move on its own steam and has contributed 25% of the top line and 15% of the PAT in the FY17-18. Also, the overall weightage of export business has already come down this year, and going forward, we expect this weightage to decline further in the current fiscal as well. Regards our export business, we would also like to further clarify that the company exports only gold jewelry. All its sales of studded jewelry are in domestic market only. The company does not export or import loose diamonds. It imports gold from international banks against SBLCs, manufactures jewelries and exports the same. The company does not use LOUs or LOCs or any such similar trade documents. The export business is a B2B business and thus has receivables. But we wish to advise that till date there has not been any bill returned unpaid. At the same time, company is working on various initiatives to reduce its receivable levels during the year, and they should start getting reflected in our results a few months down the line. During the current year, the company will continue to work on strengthening its brands, its designs, systems and processes. We will continue to emphasize on growth through franchisee model only. The company has finalized around 15 new franchisees, and we expect to keep on opening stores regularly in this vertical. I now leave the house open for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. In order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Jay Doshi from Kotak Securities. Please go ahead.
Yeah, this is Rohit Charadia. Good evening all. Very quick question, on your franchisees, if you could help us with, what is the typical size of a franchisee? How many franchisee stores did you open in the fourth quarter? And what is the typical initial, stocking level at a franchisee?
So, the franchise model is actually, we have only one model that every investment by the franchisee only. Mm-hmm. And right now, total we have around 94 stores. Out of 94 stores, 12 stores is the franchisee. Last year, we have 92 stores. Out of 92, 10 stores with the franchisee. And this April, we have already opened 2 franchise stores. And going forward, we have 7 stores on pipeline in next 2 months. And another 2 months, 8 more stores. So we have finalized 15 new stores, only franchise stores. So going forward, we are about 90% stores are the franchise only. So this is the franchise model. And typically in the franchises, the store size is around between 2,000 to 3,000 square feet. And the inventory level is depend on the city, is around from 8 crore to 13 crores, the inventory level of the franchises.
And how many franchises did you open in the fourth quarter?
So fourth quarter, actually, we were supposed to open 3 stores, but that 2 stores we have opened in April because franchisee model, what is happening there? Because first we do the due diligence, complete due diligence, then in our own store, when we sign the agreement, it takes only 2 months. But in franchisee model, it takes 4 to 5 months when we sign any franchisee agreement because we have the set vendors in our own store, but they have their own vendors. They took more time. Then our every franchise is a bank compliant. In every franchise is funded by the banks. We have tie-up with SBI Bank, and every franchise is the bank compliant. So banks another takes more time. So that's why instead of 2 months, franchisee store take 4 months to open.
So you opened only 1 net in the fourth quarter?
Fourth quarter, we opened 1. This April, we opened 2. Then 7 stores in pipeline, which we are opening in next 2 months.
Sure, understood. And on the exports business side, your fourth quarter, revenues came in at 300. Understood that there is a lot of pressure in the Gulf, especially after the VAT issue. What is the normalized annual, run rate you would like to maintain here?
So actually, if you remember, in the start of the year, we have already, because that time UAE have already imposed the 5% import duty. That time we have already given the guidance for the export that export business will be stable. So there is no increment in the export business. But again, our export business was stable. But in this fourth quarter, in January, they have imposed the 5% VAT also. So that's why there is a decline in the export business. So now they have removed the VAT. So now this year we think that we are expecting the export business either stable or some decline.
Okay, with a stable...
sorry to interrupt, Mr. Jay Joshi. May I request that you return to the question queue for any follow-up questions as we have several participants waiting for their turn.
Reduce your receivables. As you said, you're working on a lot of measures. If your, outlook for export business is stable to modest decline only?
Actually, because the reason is behind that, because already Gulf have imposed 5% import duty. Yes, they have removed the VAT. That's why we cannot expect that decline in 30-40. If they will not remove this VAT, maybe we are expecting 30-40% decline. But now we are expecting some decline in the export business in the coming year.
How do you reduce receivables if exports is flattish?
So definitely we are working hard to and we have set a target till September to reduce the debtors by 30%, and we have already started that.
Sure. Thanks.
Thank you. The next question is from the line of Hitesh Kumar from Aksa Capital. Please go ahead.
Thanks for the opportunity. My question is on with regard to your revenue growth this quarter. So historically, if I look at Q4 typically accounts for 27 to 30% of your business and of your annual turnover, and that also coincides with the wedding purchases. However, if I look at this particular quarter, despite gold prices being higher sequentially as well as on a YOY basis, both on a quarter and YOY basis, your revenue growth hasn't been to that extent when we have opened about 10 to 15 stores in this particular year. So quite possible that you have seen a volume decline despite adding stores. So we just throw some light on this aspect.
Actually, if you see that overall industry in the fourth quarter, so because of the gold price has suddenly increased, if you look at the 3 quarters, the growth is more than 30% or 25% in the domestic business. So we were expecting some decline, already declined in the fourth quarter because there is a lot of business earlier. But if you look at the fourth quarter industry-wise, there is a decline in the industry-wise. There is a 20% decline overall industry-wise in the fourth quarter because the gold price suddenly gone up. But we did around 12% growth. And if you compare to the organized sector peers, and we are in the line of that only, and we are not again this first quarter after the Akshaya Tritiya, the demand has come back, and because this is definitely quarter to quarter, demand can be fluctuate. But if you look at the whole year, we have said so many times earlier also that quarter to quarter maybe demand can be fluctuate. But there is a clear sign that business is shifting from unorganized to organized. So we are expecting a good growth in this year also. And the business is, if you look at the fourth quarter, the business is back to normal. And the little bit if you look at the last year, the growth was more than 40%. The base was a little bit higher also. But we are very satisfied with 12% growth in the domestic compared to the other players.
No, but then, I mean, if the business is moving from unorganized to organized, you should have been some beneficiary of it despite, as you say, the industry has degrown. But, but then there are your competitors have shown reported growth, and this is much above the price growth. So at least if not for the volume growth, your price growth should have offset the volume decline that you may be suggesting, which happened in your case.
The price difference, if you look at is around, there is no volume decline because the price, if you look at diamond jewelry is also there more than 30%. And if you look at the growth of price difference, it is around, I think, maybe 5% compared to the last year.
Sure. My second question is with regard to your, if you could just share what is the current debt and give the breakup of debt between your bank borrowings and your borrowings and your gold loan borrowings. What would be the split there?
Just if you look at our presentation, we have given a detailed presentation on that. What is our bank borrowing, the liability of lease gold, what is the cash available in the balance sheet in the form of FDR, and which we are going to use this cash in this year. We are using
this is not
in the buyer.
I couldn't see the presentation on the website.
Okay. So let me explain. The gold on lease is around 3,384 crores, and the debt is around 1,000 crore. So, and we have a cash of around more than 1,500 crore.
Okay. Of this 1,500 crores, how much is encumbered against the gold loan?
No, only the 10%. We have to give only 10% margin for the to avail the gold on lease.
Right. So how much is that amount? Please tell the amount which is encumbered.
Around 300 crore. Around 300 crore.
So if I look at your balance sheet, the bank balance other than above, is that the encumbered bank balance?
No. That is there are two balances. One is the long-term FDR, one is the short-term FDR.
Mm-hmm. So you're telling that not the entire fixed deposit is encumbered against gold loan, only part of it is encumbered?
Yeah, only 10% is requirement.
Okay, got it. Sure, thank you.
Thank you. Before we take the next question, we would like to remind the participants that you may press star and 1 to ask a question. The next question is from the line of Senthil Kamraj from Newberry Capital. Please go ahead.
Yeah, good evening, sir. My first question is with respect to the average interest cost. So, what is your average interest cost?
Average interest cost is around 3 point.
The average. No, you want average interest cost a percentage of sales, or because the interest cost is different on bank loan as well as MGL. So combined interest cost is about 3.08%.
This is 0.3% to the sales.
Percent of outstanding borrowings?
So outstanding borrowing for the gold loan lease is around 3,300 crore, and the working capital is around 1,000 crore.
Okay, just comment on the gold loan.
So gold loan is around if you include the gold loan rate, is on gold loan rate plus LC commission, everything including is around we have 5.5%, and the working capital is around 11 to 12%.
Yes. And my second question is with respect to the number of franchisee stores you are planning to open for FY19. Like you are given the number of stores for the next 4 months. So for the first quarter, so what is the plan for the next entire year?
So total store we want to open the next year is coming year is around 30.
So 90% of this will be the franchise stores.
Yeah, 90% will be the franchise.
Okay, so that's it, Mr. Thanks.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment Managers. Please go ahead.
Sir, I have 2-3 questions. First of all, I was just trying to look at who are your bankers in the last year's annual report, but you haven't mentioned. Just wanted to know who are your bankers. Second, why should you have a structure wherein you have cash of about 1,500 crores and long-term debt of about 1,000 crore, or working capital debt of 1,000 crore, if you could, highlight that.
So
and my third...
Yeah. Go ahead, please.
And my third question is, how much of your balance sheet is in export business?
We have already, because earlier we were not having the cash, and if earlier we don't have the cash in the balance sheet, but now because we are generating cash, and now if you look at the complete presentation, we have given the plan, this much cash we have, and we are reducing the liability. How much we will reduce this year the liability? We have given the complete plan in the presentation. 400 crore we will do the buyback, and balance we will reduce the liability from the banks.
Okay, so out of 1,500 crore cash, you will use 1,100 crore to repay your bank liability?
Yes.
Okay.
Already we have started the reducing, and we have in April month we are reducing.
Okay. Who are your bankers?
Sir, bankers, we will, there are so many bankers, SBI, Union Bank, so many bankers. So, I don't know whether, because this is up to auditors, whether this requirement is there or not, but we'll definitely, this year, we'll let this to the auditors.
Okay. What portion of your balance sheet is in export business?
So, this figure we don't have right now.
If you look at our clause 41, then the segment-wise asset liability figures are available in the
clause 41.
In the clause 41, the complete details are given.
Okay.
Yeah.
Okay.
Let you check if you have any question.
You said you had 15% of your profits in terms of profits from export business. What percentage of your balance sheet is in export business?
It is less than 25%.
Less than 25%. Okay.
Yeah.
And my last question is, do you have any, do you want to consider splitting the two business or demerging the two businesses?
So because since we have already announced the buyback, so we cannot, we are not discussing this, any restructuring till the buyback.
Sorry, you are not disclosing any?
No, we are not discussing, management is not discussing any internally, any about any splitting of business or any restructuring.
Okay. Thank you and all the best to you, sir. Thank you very much.
Thank you. The next question is from the line of Devang Patel from Crest Wealth. Please go ahead.
Hi, sir. If I look at the difference between the standalone and console numbers, there is a loss that the subsidiaries and associates are contributing, and that has gone up this year. So, can you explain that?
So only because we have one subsidiary, that luxury product, because that hold the brand Ajwa, and we are developing that brand. So in that company there is some loss because we are developing that brand. We are spending on to develop that brand. So that is the only loss in that company.
Okay. And for the full year FY19, what kind of growth are you expecting in revenue? You said growth has started to come back in Q1.
Definitely right now the business is good and we are not giving any guidance. Definitely after the result of first quarter, we will give the guidance for the full year.
Okay. And even on the quarterly basis, if I look at the other income, that has come down in the last quarter. Is there any mark-to-market or any other item?
Yes, actually, if you look at the result of this quarter result to compared to the last quarter, last year fourth quarter, there is a 40 crore M2M profit was there in the last quarter. And this year, in this quarter, there is a 6 crore of a loss of M2M. So there is a difference of 45 crore. Then, if you look at the marketing budget, it is almost 2.5 times if you compare to the last year fourth quarter. In spite of that, there is a growth in the domestic profit, is around 10%.
Okay. So then finally, the shares which have been gifted to family members, can you confirm if any of these shares have been sold or these still remain within the family?
So actually, in this, I want to clarify that since IPO, neither any promoter have pledged any shares, any sold any shares, transfer any shares. So this share is gifted to the one of the promoter, my brother, to the daughter-in-law, and because that person is not in the business, so it will not be appropriate for us to discuss any action by the individual.
Okay. So in the notes you mentioned some 400 crores of receivables have been subsequently post the balance sheet date has been recovered. Can you also comment why there was some a delay in collection?
Yeah, actually in January, 1st January, the UAE government have declared the 5% VAT. So suddenly the sales have come down there. So there is a little bit delay in that payments, but these payments have come in the April month. And our auditor also certified that in the clause 41 also in that payment have come because of some delay. The bunch of payment came in the March end, and that subsequently we received in the April.
Okay.
But now the business is, because they have removed the VAT everything, and the business is normal.
Okay, that's all from my side. Thank you.
And that amount, as we have already reduced the further bank liability.
Right.
Thank you. The next question is from the line of Akash Singh from Alpha Alternative. Please go ahead.
Good evening, sir. Sir, I have two questions. One is on the franchise model that you have. As you mentioned earlier, all the investment is by the franchisee. So what's the implication on the margin sharing or the profit sharing with franchisee?
So actually, you can say the profit sharing, because there is no expense involved, because in our company there is a gross margin, then we are spending on 4-5% is the expense, then the interest also. Okay. So in our franchise model, so there is no cost involved. So definitely we are sharing almost 50% with the franchise.
Okay, and the second question is like, what's the inventory turns of the company in terms of selling gold jewelry and studded jewelry?
Actually, we have the complete turn. The complete turn is around 1.6 because we have mainly our own store, and only we have the franchise model just started this year, last year only. So as the franchise model grow, our inventory turn will also grow.
Okay. What is the difference between the inventory turns in terms of owned stores and franchise stores?
So because in franchise stores, the inventory on the books of franchisee, and own store, the inventory on our books. Okay. But so if the franchise stores, as we increase the franchise stores, the sales, we will book the sales to the franchisee, but there is no inventory on the books of company. So so our turn will be higher.
Okay. Thank you. That's it from my side.
Thank you. The next question is from the line of Manish Podar from Renaissance. Please go ahead.
I just had one question. This entire, share gift and stuff like that. So, why did the promoters actually not think of increasing the stake by market purchase? And let's say, if the value was there in the company, why didn't this option was explored?
So, actually, we can do only one thing. Either we will purchase the shares or buy back. Both the things we cannot do simultaneously. So that is not allowed. So that's why company have decided to buy back the shares, because we think that this is very undervalued, and we have to. So the company.
No, I get your point. I'm just trying to understand. Let's say if you gifted the shares, you had earlier issued CCPS also. Why not increase the share when the share price is back to where it was there? Let's say 18 or 24 months back.
What I want to say is that this was also discussed and the promoters were very much willing to buy back. But there's one issue that if the share price is moving so in such high level, and if the promoter keeps on buying when the share prices have fallen, then it can create an adverse. Then it make.
What is your question? You want to ask that why the promoter is not buying?
Yeah, I just want to understand, let's say, if there's so much value in the entire business, when the promoter is approving for share buyback, because it's majority approval up there, why is the promoter not participating in the initial part through market purchase by itself?
So, actually, first of all, in buyback selling, we are not participating. Yes, there is an option that we can also buy, but simultaneously it is not allowed, because if we buy shares, then we announce buyback. That is, there are some legal compliances there.
Okay,
so fine, thanks. To buyback, yeah.
Thank you. The next question is from the line of Subrata Sarkar from Mount Infra Finance. Please go ahead.
Hello.
Yes.
Yeah. Sir, first a simple question, like where can I get you this presentation, because I'm not finding it in your website or BSC filing. So can you help me?
That is on NSE. That is, I think BSC, that is not yet.
I think they will take more time, but NSE is available. NSE is also available.
Okay, so NSE you have already uploaded it, but it is not.
We have uploaded in BSC also at around 34 o'clock, and NSE also, but BSC takes some more time before it starts showing. Yeah.
Okay, in your website also it is not uploaded as of now, sir.
We'll check.
Most probably.
We'll check, but it is uploaded, I think, but we'll check.
Okay, not an issue, sir. This is first thing. The second thing, just to understand, sir, from a broad perspective, like previously, means almost till this time, you are working on your own store-based model, and like we have been very successful on that. So why we have decided to shift and change our model to a franchisee based? So on a broader perspective, if you can help me to understand on that, sir.
So actually, there are two things. One is that if you look at the company is focusing on how to increase the ROE, how to reduce the working capital requirement. So, and we have built if you look at, yes, from beginning, I can open the franchise store. Franchise model is always better. But we were building the brand. We are not like other brands who have built the brands. We were building our brands, and we had just started our company in 2005. Then we did our IPO in 2012. We were building our brands. Once we build the brand, then definitely franchise model is always better because you don't require any capital, you don't require any working capital. So franchise model is always better. And now we have built our brand, and we are getting very good response from the franchisee also. So now it is always better, and a customer will not know whether this is franchise or own store. Everything is same. Only thing is, yes, in our store we are investing, and franchise store only franchise investing. So franchise model is always better to open more and more store. Yes, if I want to open own store only, then every year we require whatever profit in the company, then reinvesting in the own store only. So now we are generating free cash. So that's why, and that's why we are focusing on franchise model only.
Okay. Second part, just to you have explained, but still let me, since I don't have the presentation as of now. So now out of this, your entire 1,500 crore of cash, you have decided to go with the buyback for 400 crore, and rest this 1,100 crore entirely you will use to pay for to pay back the loan. Number one, is it correct? And second, what is the time period?
Yeah, this is correct. And we have given a detailed thing, how much cash we have, and we have how much we will keep for the I'm reading this. We have cash of 1,491 crore, and subsequent realization of export receipt is 416 crore, less reserve for buyback 424 crore. Amount required for margin money to lease gold is 300 crore. So balance amount is around 11,787 crore. So approximate this amount, we are already starting reducing the liability, and we are reducing the liability.
Okay. Sir, any time period on that?
It will help us to reduce our interest costs also for this year.
Yes, sir. I understand. Only, sir, to understand, what will be the time period so that we can repay back loan of around 1,100 crore? So total time period it will be taken by the company to reach that state?
So I think we have already started, and I think next 2-3 months this will be over.
Okay, so within next 3 months we can achieve that, sir.
Yeah. Because FDR have some dates, we are breaking the FDRs and paying also. So for next 2-3 months it will be over.
Okay, great, sir. Just another question on the buyback side, sir. Any progress on the legal aspect of the buyback side? What is the progress, and by what time can we expect this buyback to record?
So definitely our merchant bankers are doing the work, and soon we are going for the shareholder approvals. So that is on that timeline. I think we are going for in maybe 1 week or 10 days time. We are going for the shareholder approvals. Once the shareholder approval received, then I think whatever time is taken, that time is taken. We are on right track.
Okay, sir. Thank you. Thanks for the reply, sir.
Thank you. The next question is from the line of Anu Agarwal from NDA Securities. Please go ahead.
Good evening, sir. This is Anu. And, sir, my question is regarding so much volatility in the PC Jewelers stock. Sir, there are so many bulk deals taking place, and I think the stock has been hammered intentionally by big traders. So are you doing anything, are you planning to take any action regarding such big traders?
So we cannot take any action. It is up to the regulator. If they find anything wrong, so I think they will take an action, because it is not, the company cannot take any action. Company is doing only the business and on regular basis opening stores, and company is focusing on business only. So now for the share price, everything, this is up to the regulator to monitor.
But I think whenever there is any issue, you give clarification. Despite that, there is so much negative propaganda going on business channels regarding PC Jewelers.
So whatever we heard in last 2-3 months, we have already disclosed in detail. So whatever company can do, company is doing. Whatever, like one question came that if that is 1,000 crore, then why the interest cost is high? We have clarified this issue so many times that we have the lease gold on the balance sheet, and the balance amount is the lease gold interest. And this we have already clarified so many times. Now again we are clarifying. So everything is clear. Only we cannot go to the rumors and the nothing. And company is, and if you look at our presentation, I think this is the maximum disclosure we are doing. So what company can do, company is doing.
Okay, sir. And one more question, sir. There's surge of around 400 crores in the short-term borrowings in Q4. So, sir, this is pertaining to what, sir?
No. This is actually if you look at the March figure, the borrowing keeps fluctuating time to time. So, so according to the season, so it is not the additional. The limits are sanctioned. So there is no additional thing is there. And in whole the year, the balance is between 700 crore to 1100 crore always. So it is a particular date. Suppose my debtor payment came in March only. Then you will see that this amount is 650 crore. And we have already adjusted in the April, May that amount, and the borrowing have come down already. And we have started reducing further also.
Okay, sir. And sir, you have communicated that you are going to take approval for buyback in 1 week or 10 days, because now there are rumors on social media platform that this buyback will not happen. Because, sir, that's why, sir, I wanted to be assured that you are going to take approval in next 1 week or 10 days. Sir, can I assure that to my clients? Because
Definitely, we are going to vote the shareholder approval in shortly.
Because, sir, I know that I have just come to know that PCJ is among 100 luxury brands like gold chain brands in all over the world. Because if your company is doing so well, then there should be no such hammering in the stock price, sir.
You are right, but company can do only what company is doing their work, and company is focusing on business, and company definitely we have increased the disclosure also, and so we are doing, and we are opening regular basis, we are opening stores.
And sir, so I can assure you on your part that our promoters are genuine. There is no need to be worried. Company is growing, so you sit tight and have faith in the management. Company, your rates will be back. We can do 400, 500 rupees in near future also. Like I can assure my clients, no?
Thank you. Yes, you can.
Well, that is the main question, sir, because everyone wants to be like tension-free about PCJ.
Okay, thank you.
Okay, sir. Thank you, sir. Thank you.
Thank you. The next question is from the line of Rajesh Kagra from Cogensis. Please go ahead.
Hello. Just wanted to understand, you mentioned that in your franchisee model, you will get banks to finance your franchisees. Can you throw some more light on this, and whether you will be providing any bank guarantees to the banks who will be lending to your franchisees?
No. There is no guarantee provided to the company. Whatever limit is there between bank and franchisee. So there is no guarantee provided to the company. So everything is done individually by the bank, everything. And whatever guarantee is there, franchisee provides the guarantee, not company.
But you are getting, you mentioned one bank name also. So you are getting that bank financing then through one particular bank.
We have tie-up with the particular bank, and the tie-up is, if our franchisee applies any loan to the bank, they will appraise that everything. If they are satisfied, then they will sanction the limit for them.
Okay. Thank you very much. That's it. Thank you.
Thank you. The next question is from the line of Sandeep Lakhar from Newberry Capital. Please go ahead.
Hello?
Yes, sir. Please go ahead.
Yeah. Hi, sir. Thank you for taking my question. Just following up on the shares which were gifted, I just had a follow-up on that the gifts were made in tranches. I mean, a gift was made after every 4 days. So what was the rationale for that? I mean, why was it?
But one thing I want to tell you that, as far as disclosure is, as far as you talk about the disclosure, if you gift whether the 15 lakh share, 20 lakh share, or 50 lakh share, or 1 crore, the disclosure is same. There is no other disclosure required that.
My question is not that, sir. My question is that why was the gift not made in one go, and why was it spread across 4 days, every 4 days or something?
That I cannot comment because I don't know about this. But if you look at the disclosure perspective, Whether you are giving gift of 1 time or 4 times, the disclosure is same. So there is nothing to hide in that, because sometimes if you think that the disclosure for the higher for the 1 crore share or 80 lakh share is something different, that is not there.
Sold in the market, and if it was more than 0.5%, then it would have been reported to the exchange, right, sir?
When you sold, not the gifted, when you sold only.
So I just want to understand.
If you gifted for 1% or 2%, it is not reflected anywhere.
Okay, fine, sir. I got my answer. Thank you.
Thank you. The next question is from the line of Vikas T from Vision Ahead. Please go ahead.
Yeah, I wanted to ask one question. If after the completion of the buyback, if the share prices are compelling, will the promoter buy it from the market?
That I cannot comment right now.
As you say now, you were exploring both the options, buyback and
for future, we cannot comment for the future. What we are going to do in future.
Mr. Vikas T, do you have another question?
No.
Thank you. The next question is from the line of Sharmil Lodhia from Brasotech. Please go ahead.
Yeah, my first question is regarding the share buyback decision which the board took recently of buying about 424 crores worth of shares, which was, I think, an impulsive decision because the stock was getting hammered based on one or the other rumors circulating in the market and not in the best interest of the company. I am highly critical about that decision. Now, because the thing is that what I want from your comments about is, if you look at the balance sheet, last year, as of March 2017, your debt was around 690 crores, which shot up to around 1,050 crores as on March 2018. And it is not the case like PC Jewellers has a highly surplus cash and there is no other avenue for growth which PC Jewellers
we have already
let me complete. Yeah. So what I wanted was, rather than taking an impulsive decision of share buyback just because the market was hammering the stock based on the rumors, the company should have invested those amount in the growth of the business, because there is an humongous opportunity ahead for the PC Jewellers, and the capital will be more efficiently utilized for the growth, and the better numbers would reflect in the future if you would have invested the same capital for the growth. But now you are doing that, using that capital just for buyback, and which will not yield any growth for the company. So would management reconsider the decision of the buyback?
So this buyback decision, I think, is very right, because we have, if you look at our presentation, we have disclosed the complete cash, because we want to, every year we plan whatever cash in the balance sheet. Earlier we were opening stores, that's why we require more cash. Now we are not opening stores, and we have given the complete breakup, how much cash we have, how much debt we have, what amount required for the buyback, and balance amount we are already reducing, because we don't want to keep the cash in the balance sheet. So now we are reducing the liability, and balance amount we are doing the buyback, and because we don't require any, because we are opening 90% store franchisees, so we don't require any capital, so we are rewarding the investors.
So you are saying is you don't require for further growth any more cash than you currently have?
Yes, that's right, because we have changed our model. We are now opening more franchise, because we have set our franchisee model, and franchisee model we don't require any working capital. So that's why company will keep growing and don't require any cash. So that's why we decide this.
So going ahead, all of your new stores will be franchisee stores, and you will not be opening any...
Yeah, more than 90%. More than 90%, we are opening 30 stores this year. More than 90% is the franchise stores. And we have already finalized 15 store franchise.
Okay, can you give me a bifurcation of what is the profit margin for every sale in your company-owned store and the same for the franchisee-owned store? How much do you get when a sale is made in the franchisee and the same sale is made in the your company owns? What is the profit percentage?
So profit percentage, if you look at the PBT level, so there is no difference. Yes, gross margin there is difference because we have to share with the, but there is no cost involved, because when our whatever gross margin we have, there is a cost involved also, 4-5% to running the company. Then there is interest cost also involved. So in franchise model, these costs are not involved. So there is, without impacting the margins, we can easily grow in the franchise model.
Okay, and my second question is regarding, I'm concerned about the loss of market share, risk of market share loss against your listed or unlisted peers in the cities where PC Jewelers is already existing, it has existing store. For example, I can explain you with an example of my own city in Rajkot, Gujarat. There is a PC Jeweler store since more than 6 years, I guess. And Tanishq was also there. And recently, Kalyan Jewelers came, opened a humongous mega showroom of multi-story showroom. Now, what happened was, the PC Jewelers visibility, even though it's in the core area, it's whatever be the reason, but it is not getting the same traction after the coming of Kalyan. Kalyan came, opened a big store. It's getting almost 50% of the market of our city. Now, what Tanishq did is, Tanishq also had the small store. After the Kalyan came, within 18 to 20 months, Tanishq learned the lesson that this market has a potential and they need to do something with their store. Something is wrong with their store. They completely built their new store from the ground up, made it big, multi-storage store, and now Tanishq is also getting the traction. But we are seeing no action from the PC Jewelers. It is still not getting traction. It is still not highly visible, and it is still old store and seems like a side store if we compare to the Kalyan and Tanishq. So my point is the management looking after their existing stores, whether they are doing good or not? If they are not doing good compared to their peers in the market, then our management in the ground level in contact with employees?
This is a very good question, and company is already taking the right step of old store also. Recently, in last 4-5 months also, we have shifted some of our old store to the new locations also. And so companies definitely, I cannot comment the particular one store because I don't have the numbers, but definitely company is reviewing the old stores also. When we find, okay, whether company want to change the location or something, company do that. And within in last 4-5 months, company has changed 3-4 existing locations to the other locations. And company definitely, recently I give you an example in the NCR, Ghaziabad, we have small store there, but when we find good sale there, we have shifted to the multi-story store there in April month only.
Okay. So the management is in contact with the ground team and aware about the performance of the team.
Definitely, yeah. When you are giving the report for Rajkot, we will inquire that also. Definitely.
Okay. Thank you.
Thank you. The next question is from the line of Gaurav Jogani from ICICI Securities. Please go ahead.
Thank you for answering my question, sir. Sir, wanted to know what is the studded share for Q4? Like you have given the studded share for the FY18. What is it for the Q4?
Q4 is around 32%. 31%.
Okay. And sir, like a participant asked earlier, so can you help us what would be the volume growth for gold? I mean, in terms of volume growth, what would be the growth in this particular quarter?
So as a whole year, the volume growth and the value growth is same because the price was same. Only the fourth quarter, the price was suddenly up. So in 5%, I think, I don't have the numbers, but approximately the volume growth is around 5% and the value growth is around 12%.
Okay. Thank you so much, sir.
Thank you very much. Due to time constraints, we'd like to conclude this call. I now hand the conference over to Mr. Sanjeev Bhatia. Thank you, and over to you.
I really thank everyone for sparing their valuable time and joining us on this call. I hope that we have been able to clarify a lot of questions and the queries which were in the mind of our investors. I am really grateful to all of you for joining us and have a good weekend. Thank you.